Hello, this is Jordan, and this video is being recorded on the evening of Tuesday, October 5th, 2021. Thank you so much for joining me. Please like, comment, and subscribe if you are watching on YouTube. In this video, I am going to comment on the super bullish long-term technical setup in metals and commodity prices as a whole. First off, here we have the Bloomberg Commodity Spot Index, which in recent days ticked a new all-time high. Now, I prefer the Continuous Commodity Index, the CCI, which is actually the CRB index until 2005. And after that point, they completely changed the weightings in the CCI, and so the new CRB since that point, it just looks awful. It doesn't even represent commodity prices. I mean, in recent years, the CRB, that index was trading around multi-decade lows, but then you look at an index like this, and suddenly it's back at the 2011 high. So it doesn't make any sense. I mean, commodity contracts, there's the cost of rolling them over. That gets included in these indices, but I just prefer a look at pure prices, nothing else, just the pure price of the commodities. I think the CCI does that best. The Bloomberg Commodity Spot Index, I'm not familiar how the two are different. I think the CCI, it generally looks the same as this index, but it's probably a tad weaker. I don't think the CCI is quite at an all-time high yet, but nevertheless, the two of them I think are fairly similar, and I prefer both to the CRB, which is, again, I mean, it's awful, and people are looking at it. They were talking about a deflationary depression a couple years ago, and it just because commodity prices were at multi-decade lows, which they were not. But I'm sorry, end of my diatribe. And that's all I have to say on this chart. I mean, we see this index having rallied back up that is the 2011 high, a little bit above the 2008 high. If you look at the CCI, the 2011 high is clearly above the 2008 high. But nevertheless, you can look at this index and say that commodity spot prices they have a 13-year base going. So that's really significant. The fact that they were able to rally all the way back up to 2011, again, that's a signal that they're going to break out at some point in the next few years, whether it's 3 years, 1 year, 18 months, I don't know. We'll get into that later. But this is set up for a powerful, huge breakout in the coming years. And, we should point out, if you look at the consolidation, the bear market in the 80s and 90s, that multi-decade bear market, that 20-year bear market, the commodities weren't able to rally back to the 1980 high as they have done here. So we are clearly out of that period and setting up for a super bullish era of commodities, especially when these multi-decade breakouts come to fruition. And here I'm charting, these are just commodity sub-indices. These are Goldman Sachs indexes. And again, fortunately, they're only spot prices. So none of this funny business with the CRB index and their crappy weightings and the cost of rolling these contracts over, which hurts these charts in the long run. It's just I like to get a look at the pure price action with none of that other stuff. And these indices, so we have precious metals at the top, industrial metals in the middle, and agriculture at the bottom. I want to just focus on the metals. So the precious metals is basically, I believe that includes gold, silver, platinum, and I think palladium as well. I know it includes the first three. As you can tell from looking at the chart, that index, I don't know for certain, but my guess is that index, while it includes 3 or 4 precious metals, it is weighted mostly towards gold because that looks like most similar to the gold chart, and you can see it's building a handle on a long cup. If you look at industrial metals, that's base metals, so that's mostly driven by copper. There's other base metals in there, but that's rallied back up to 13, almost 14-year resistance, you could say. So obviously it's very overbought. It's well above the long-term moving average. So a correction here for a year or two would not be a surprise, but it's in position over the next few years challenge again and make a powerful breakout. And I don't know if that happens first or precious metals. My guess would be we probably see gold as the first to break out. But it depends on, if growth picks up and inflation picks up at the same time, that's going to be better for industrial metals than precious metals. But if we have inflation picking up, or at least not moderating or not coming down as much as we think next year, and it stays sticky and it starts to affect growth, that's the environment where gold is going to outperform the other commodities. But look, either way, over the next few years, metals are set up to have explosive breakout moves. And at the bottom, we see the ag commodities. They're not quite up to resistance, so perhaps they could have a little more run before they get to that resistance. I mean, they do have some technical upside there, unlike the metals, which already hit their major resistance points. Okay, so last thing here is as far as a potential catalyst, and this is basically very similar to part of what I've talked about with gold, which is rate hikes, or the start of a new rate hike cycle tends to be a really reliable catalyst for not only precious metals, but commodities as a whole. So here we have the Fed funds at the top. That's the Fed interest rates, for those who are not familiar, the US dollar in the middle, and at the bottom we have the CRB. And again, the CRB was good until 2005. Now it's a piece of crap in my opinion, but nevertheless, it still moves. I mean, we're just looking at this for directional purposes. And look at the vertical lines there. I mean, almost every time the Fed starts a new rate hike cycle, that's a really good buy point for commodities as far as the CRB. I mean, they tend to bottom around the same time or maybe a little bit before. I'm standing far away from my computer, or I'm at least speaking far away from my computer, so I'd have to zoom in myself to look at the chart. But, I'll give you a chance to look at it. I'll pause here for a moment, but I have to repeat that. And I'm surprised that the start of a new rate hike cycle that's even more of a catalyst for commodities than gold. But, and at the same time, oftentimes the start of a new rate hike cycle, you see the dollar sell off. I mean, go back to the last time, and the first hike was at the very end of 2015. And it's true, that's when the rate hike cycle began. But they paused for a year after that point. So one could maybe make the argument the rate hike cycle didn't really begin until the end of 2016. So that is something to, especially if this correction in the stock market, it turns out to be a minor correction and not a significant correction. If it's a minor correction, we're looking ahead over the next 3, 4, 5, 6 months. Stock market goes to new highs. What is that telling you? Well, the economy's probably doing fine, or at least it's doing okay enough for them to start rate hikes. And that could be when the dollar peaks. So that's something I'm looking for potentially in the first or second quarter, probably more likely the second quarter of next year. And so that is my near-term and long-term outlook for commodities and metals. You have to love the long-term technical setups in precious metals, base metals, as well as the spot commodity index. When all commodities are equal weighted, and you look at these indexes going back decades, I mean, they've rallied back to the 2011 high, or at least in the case of the CCI, probably really, really close to it. And while they're probably not going to break out immediately, when that happens in the next, whether it's the next year, 2 or 3 years, that's going to set up some real spectacular moves in this sector. And that's all for this video. Hope you enjoyed it. Let me know what you think. Check out my website. All my free work is there, and my premium service. Some incredible values right now in juniors in the precious metals world. I mean, a lot of stocks are going to have potential to be 10 baggers, I think, over the next 3 years. And on that note, thank you so much, and I look forward to doing another video for you guys in the days and weeks ahead.